Hey everybody, Jeremy here with your market bias report for Sunday, August 6th. Jumping right in, we are continuing to see some weakening at the top end of the chart, and for weeks now, well, almost a month now, I've been pointing to some divergence here in the MACD and RSI. Adding to that concern that I have at the top of the channel this past week, Sunday, last time that I checked in with you guys here, we were sitting right here at this green candle on the S&P futures, and it was actually trying to break out and closed above the channel line here, discounting this one wick. So above the major box here of resistance, we did have a fake out wick here that caused a little bit of concern that I had mentioned briefly on it, but basically said, hey, if we close above this main bulk of the resistance zone, that technically is a trigger. However, we didn't have big volume on it. You'll see here this little green candle for volume. So we had the breakout confirmation, but we didn't end up getting that volume follow through. And the day was still developing when we checked in last time. So I said, hey, if this breaks out, we should be good to go. It looks like the bulls are still in charge and trying to move forward. Well, they lost steam. They closed technically above that level. They kind of rolled over, and we have had a whole week worth of selling. Market has just opened here and hasn't moved hardly at all in the last hour or so since market futures opened here on Sunday afternoon. But again, we have been talking about the divergence here. We've kind of gone over that in previous videos. If you need to go back and look at what I've been talking about the divergence in the RSI graph and the MACD graph, go back to previous videos and check that out. But we have some extra signs showing weakness out now. One is the breakout that failed. Two, we had the consolidation zone here above about 4,550. That failed. The moving averages have now crossed over, and the 9 EMA has crossed below the rising 20 for the first time since way back here. This was the last time that it crossed, and then it crossed back above here in what is that, May. So early May is the last time we had a crossover. And then finally, we actually have increased volume on the sell-off. So you'll notice that if we just kind of scale back here and look at the chart, most of the high volume days have been green bullish days for a while now, and it's been a hot minute since we had aggressive selling with higher volume. Basically going back all the way to March was the last time we had consistent multiple days in a row of high volume selling. So that shows a little bit of concern in the market here. I'm continuing to be very cautious now that we are at the high end of the chart. I'm not saying that the bull run is over. I still can see a case both ways. Right now, if we look at the weekly chart, we are still above the rising 9 EMA. And if we hold that level, which is currently right around 4,500, this could resolving to the upside. And if it does, it would kind of be that next leg higher back up to all-time highs around 4,800. But like I said, I am continuing to see weakness in the chart. I'm continuing to see divergence. And I'm going to be very, very cautious here in the S&P 500. Any rally back up that does not get back above the 20-period moving average is going to be met with suspicion in my mind. It could very easily rally up and then roll back over and come back down to this lower trend channel and the rising 50-period moving average. Or I could see a base case go sideways for a couple days and then continue on down and test this lower zone around 4450 without a rally. So either one of those is a potential here. Being very careful in the S&P 500 right now, looking for plays elsewhere. Very similar conversation for the NASDAQ. NASDAQ actually set a new lower pivot high here, and we then broke this support zone that was a very solid support zone that we broke around 15,500, and we are now below that, below the 9. We've crossed below the 20. The moving averages have crossed themselves, and we definitely see this downward momentum starting with the RSI and MACD indicators, and we do see higher volume for the bear side here as well. So I'm not looking for much in the way of bullish plays here. If anything, I'm continuing to take profit to lock down my risk graphs, selling covered calls on long-term stock positions that I have. Anything that I have over 100 shares of, I'm selling covered calls to take some risk off the table. And continuing to be very defensive here because we have just had such a monster run. I mean, at the peak here so far this year, we were up 35% on the year. Currently, we're up just shy of 29%, or just over 28%, I guess is a more accurate way to say. So we have a lot of gains this year, and that's just since the end of the first quarter. So this is basically starting March, not even the full year. And we have a lot of gains. Now it is time to get defensive and protect those gains. So not looking at S&P really for any trades, not looking at the tech sector for any trades. If we go out to the Russell 2000, the Russell 2000 is still interesting to me, mostly because of the weekly chart here, where you can see that we still have some pretty major catch up to do to get back up to all-time highs at 2460. This doesn't mean that it's going to be rip roaring and that money is going to cycle out of S&P and the NASDAQ and come into here, although there might be some rotation. If the whole market sells off, this is going to sell off as well. But it does make sense in my mind that the Russell 2000 might still hold its ground a little bit better than the S&P and the NASDAQ, just simply because we haven't come off the lows that much. So this might be an area that benefits from kind of neutral conditions. Like I said, if everything goes bearish, it'll probably sell off as well. But if the rest of the indexes kind of hold their ground and just kind of go into consolidation phase, we might see some of that money come back into the Russell 2000 here. I like that we're still holding this most recent trend line. We haven't broken that trend. We are still holding the weekly 9, and we didn't have high volume selling on the weekly chart, at least. Let's go take a look at the daily chart here. So on the daily chart, we did have about even. We didn't have what I would consider high volume, but we did break just barely above our average line here for volume. So a little bit of weakness there, but not nearly as much as the other indexes. I would be super, super happy to see this just trade sideways and let time catch up for this trend line here to act as support. We're going to have to wait and see and just let this develop for a little bit. I don't really think that there's much of a trade here unless you're day trading. If you are day trading, you might be able to trigger in somewhere above like 1980. Looking to play back up towards the highs of the channel here, but we'd have to go intraday and see if there is a good setup to be had there. That kind of gets blown out of the water by Friday's huge spike and then immediate sell-off right back down. It makes it hard to trigger off of anything. I would have liked to have triggered maybe down at like the 1980 to clear the previous resistance here, and hopefully the 200 period moving average will come down and converge on that. But because we have this little peak and drop, it makes a trigger on the daily chart hard. So I think we're going to need some time, even for a day trade there, for that to kind of play out and give us a new reset signal. Then finally, going out to the Dow Jones, it is technically still below its 20 period moving average, which isn't great. We did have higher volume here on the sell-off with a big wick that would typically indicate more selling to come. But we are sitting right on top of a really important support zone, basically from 34,700 up to about 34,950. So there's a lot of support in that range. We also have the rising 9 here that should support price at that kind of 34,700 level. So not super concerning. Those are the two areas of the market that I'm going to be looking for bullish trades in. And that again is the Russell 2000 and the Dow Jones. The S&P and NASDAQ need time off. And actually, let's just go to the actual S&P chart instead of the futures chart. And you will see we actually had a bearish engulfing candle. So anyone that doesn't know much about candlestick analysis, a bearish engulfing candle is basically when you totally absolve the previous day's bullish movement in a bearish movement. So you can see we started at the very top high here and we went all the way down and closed well below the range of that candle. So that is a bearish engulfing candle that usually signals more downside to come. It wouldn't surprise me to see us come down to 444, somewhere in there, so another $2.80 down, and then have this rising 50-period moving average kind of meet us there. But we will see. Like I said, I'm not really shopping much in the S&P area. Going out to some of the other futures charts real quick. Bitcoin just being as boring as Bitcoin can possibly be. We have technically given up the 50-period moving average here as of now, but it's kind of been jumping all over a place. It hasn't really been respecting that line very much, not nearly as much as been respecting the decreasing 9 as resistance. And this is an important little lesson I'll toss in here. So the importance of moving averages can change over time, and the behavior of the recent past is really important to pay attention to. So right now, out of all the moving averages, the 50-period moving average price over the last week or so has just jackknifed back and forth across it numerous times. So it's not really seeming like this 50-period moving average is holding as a strong support level. However, the 9, if you see here, every time price gets above it, it just gets smacked right back down. And how many times have we had this precision test to that 9 where prices hit it and gone, nope, not yet, nope, not yet, nope, not yet. So anything in Bitcoin to the upside, you are going to have to see price not only move above that 9, but close above that 9 EMA. That will signal a change in character for this chart, because that 9 has just been a rock solid resistance level. Unfortunately, we do have the decreasing 20-period moving average, which acted as resistance back here a few days ago when it tried to break out. So, you know, any trade there is going to be short-lived. You'll have to chase stops up very, very quickly, be really quick to take profit if you are looking to trade and profit to the bull side here. I think patience plays. We need to wait and just kind of let this trade work itself out, because it is acting as a really strong support here just under 29,000. And if that breaks, it's going to be a quick trip down to about 27,500. So even though I can see cases for both directions, in those scenarios, it's more important to be patient and protect your capital and wait for a clearer setup to develop. Going out to crude light. Over the last week or so of crude light, we had talked about the potential of going up to and testing this previous resistance at $83.50 is where we had our trigger alert. So anybody that played the breakout here, as long as you didn't get stopped out on the intraday analysis here midweek, 83 played, 83.50. We almost hit. We got up to about 83.24. And 83.30 was the high price here. So almost dinged that profit target. This might not be a bad place to go ahead and take that trade off if you did take any trades on crude light. Although I do like the energy sector as a whole. If we go out to the ETF XLE, right now it hasn't done anything wrong. We still have this very significant resistance level that it has been battling up against. I would love a little bit more consolidation here, and then a pop above that would be triggerable. And on the weekly chart, that would be taking out the previous high pivot here and officially setting a new pivot high. We have a wick that dinged above that level, but I want to see some actual follow through to that, and it's a little overextended right now. In the ideal world, and obviously we might not get this, I would love to see a pullback down to maybe 84, 84.50, somewhere in there. Come back up, retest this level, and then be off to the races, back up to this previous pivot high. So that's the ideal scenario that might play out over the next week or two. We'll see if it cooperates here. We do have a little bit of a rounding top starting. Hopefully over the next few days to a week, we see a little bit of consolidation and a little bit of pullback, reloading for this breakout here above 87.60. Going out to, where do we want to go? Let's go to gold. All right, on gold, we have pulled back to the 200-period moving average. We're getting pinched between that and the 50. It's going to be hard to play gold here, mostly because of what's going on in the dollar. I do still like a breakout above 2,000 or 2,020, but it is being held back by the US dollar strength that we had over the last 2 weeks. You can see this huge run up over the last 2 weeks. On Friday, we did gap down. I did like the reprieve there, but we are now sitting on top of all three major moving averages here, the 250 and rising 9. So you'll see I have a couple of alerts set to see which way this breaks over the next couple of days. If it goes to the upside, that is going to be detrimental to stocks and maybe signal lower prices still to come and more consolidation at a minimum, more to come in the marketplace. If it breaks and starts coming back down, that will support US equities. So looking to see what this does and triggering based on that in any bullish or bearish stocks that I have prepped for the week. Going out to natural gas. The chart will load. All right, natural gas. Let's take a quick peek at this. Nothing really to see on the daily chart. We do have kind of a slight downward angle channel. It is fighting to try to break back above the 50 period. But I want to look at this more on a long-term chart. And you'll see here on the long-term weekly that we have kind of reclaimed most of our moving averages. We're sitting right on top of the 9, and it wouldn't be out of characteristic for this to just chill for another week or two and hopefully it resolve itself to the upside. I still really like the bottoming pattern that we've had here over the last several months. I like the fact that the MACD is just about to break back into bullish territory. Love the double bottom and oversold conditions on the RSI and setting new higher low on the RSI. So this is actually bullish on the RSI right there. So we're going to have to wait and see, but continuing to just put this on the radar, keep this on the radar. Eventually, I feel like we are going to get a breakout on natural gas, and it is just a matter of time. Finally, going out to silver to wrap up here. Silver is much more volatile than gold, but tends to trade somewhat in tandem. We had a massive run up a few weeks ago and have since basically given all of that back. We're now fighting to form support on the rising 200 period moving average. If we get that, this will be on the weekly chart a higher pivot low. So that should support prices coming back up and retesting this kind of diagonal resistance level again. But there are other places in the market that I'm more interested in, especially since I see the MACD breaking back down here below our 0 line. Finally, to wrap up, guys, a couple of quick thoughts. First, out to the economic calendar. Nothing really to see Monday, Tuesday, Wednesday, so we're going to have some reprieve from economic events. Obviously, we are still in earnings season, which we will get to in just a second. So any trades that you are taking, be sure that they do not have earnings coming up. We are past probably over 80% of stocks reporting earnings, but there are a few left here, so be careful on that. As far as economic data, Thursday and Friday have a few different important reports. CPI data, this is the Consumer Price Index, and basically it measures the end price to consumers of goods that they are purchasing. I would love to see this continue to slow down, either come in at 0.2 or maybe even 0.1, showing a decrease to the rate of increases that prices have been going for quite some time. That would help with the inflationary narrative. Unemployment claims, we did get a very slight revision to the upside here for the forecast. So that'll be important on Thursday as well. And then coming into Friday, core PPI, this is the Producers Price Index, and this is the cost to producers to make final goods to sell. Hoping for that to slow down a little bit. It's actually forecasted to speed up, which would not be great for the inflationary conversation. Hopefully this comes back in actually in line with the previous one, showing at least it's taking a pause, if not actually revising down. And then finally, the preliminary consumer sentiment report. This is a survey report, basically looking at the market as a whole, and like the title suggests, the sentiment of the market for prices and everything moving forward. So hopefully we get a little bit of a reprieve on that. To wrap up the day today, I want to go out to finviz.com's heat map here. This is a tool that you guys have seen me use before, but this time, two things. First off, looking at all the price action here, just a quick look, you can see really the only tech that logged a good size gain this past week, or I guess this is a 1 day. Let's toss this out to a weekly chart, actually. Yeah, so weekly chart, the only tech giant that reported anything really positive was Amazon. They gapped up about 8% on earnings, faded some of that back, but all of the other tech basically was in the red. Lots of red in here. The one thing that stands out to me is down here in energy. So if you take a look at the heat map as a whole, lots of red pretty much everywhere, especially utilities. Utilities just got drilled this last week. But energy over here actually had some decent gains, 2.3%, 4.4, 2.6, 3.1. So most of the green that I see in this entire heat map over the last week was in energy. So that's an area that I'm going to continue to look for positive trades to the bullish side. Another thing you can use this heat map for, if you click on this box, you can switch from weekly to daily, whatever for the time frame. But if you scroll down, you can also go to earnings date. And earnings date, anything that is pink are companies that still have not reported for this earnings cycle. Everything that is kind of this teal or green have already reported. So just a quick glance at this, you can see most of the S&P 500 in NASDAQ and Russell, like most of the market has reported already. So thankfully that is behind us and we can kind of get back to business as usual trading without having to worry about earnings. We do have a few big dogs left. Walmart, Nvidia, Avgo, just to name a few, Home Depot coming up. So basically coming out to the last date that I see really is August 23rd and August 24th for Intuit. So after August 24th, we will be through earnings. But until then, we do still have a little bit of risk there. If you're going to trade a stock, check to make sure it doesn't have earnings, and also check to make sure any of its major peers don't have earnings, because they can trade in sympathy sometimes. I hope that helps, guys. Trade safe this week. As always, let me know if you have any questions. I hope this was helpful. Smash that like button and subscribe if you are new to the channel, and let me know if you have questions.